What is going on, investors? Hopefully, you guys are doing well out there. I'm excited to be here because we are going to be able to talk about ARM Holdings. This is the first here on the channel. This company went public back in September, and my general rule of thumb is when a company goes public, even when you have the rich history of ARM Holdings, I like to wait about 6 months before you even really pay attention to this one. And that's what we're going to be doing today. The company just reported their Q4 earnings. We also got quarterly guidance for the upcoming quarter. We also got 12-month forward revenue guidance as well. So we'll take a look at the guidance on a quarterly basis, also forward for 12 months. We'll go through all the different revenues and the profits, the balance sheet. This is a fantastic company. You get this company at the right price, I think you're going to be sitting on a really good investment. We're also seeing in the after hours, shares are down by over 7%. So the market's tossing this one out a little bit on earnings that you'll see are actually pretty darn good. Now, there comes some risk, if you will, with this company. And one of the risks is actually an open source architecture. Now, if you're not aware of ARM Holdings, essentially what they do is they license a chipset design to companies like Apple. In fact, Apple's entire product line, from the iPads to the Macintosh computers and certainly the cell phones, they all use an ARM design to operate the chipset. And it's been this way for a while. In fact, Apple famously went away from Intel's x86 design to ARM's design. And I got to tell you, once you go to an ARM laptop, you will never go back to an Intel. It's one of the reasons why I crap on Intel constantly on this channel. Is Intel's design is like a 1990, 1999. It's now 2024. ARM makes a much better solution for laptops, certainly desktops. We're also seeing this company get their designs into personal computers, also more importantly into the data center as well. But there is an open source version or an open source alternative to ARM's design, and it's called RISC-V. I attended a conference last year in Santa Clara. It looks like they're going to have that conference again. I'll try to make it. It looks like it's a couple months from now. I'll try to make it to that again and see if there's any new information. You also have a little bit of risk here. SoftBank still owns the vast majority of the company. In fact, I think they still have a 90% stake. And so when this company went public, they only floated like 10% of the company out there. And so that it could be good or bad. If SoftBank continues to hold, well, it reduces the amount of outstanding shares. But if SoftBank runs into financial problems or they want to just unload the company, it could create some downward selling pressure. Also, SoftBank could maybe do some weird things from a management perspective. They have basically all the influence over this company. So still a little bit unique situation, not as pure as we would like. But some things that we do like are these Q4 numbers. Revenue came in at $928 million. That was 46% growth year over year. And for a company, this is not a new company. This company's been around for ages. High-end estimate for the most recent quarter was for $925 million. Again, they came in at $928. But again, this is one of the reasons why when a company goes IPO, I like to take at least 6 months, ideally maybe even a year or two, where you just kind of follow the situation because analysts are still getting a feel for what type of revenue and what type of profit this company is going to be able to put up. Now, they gave us Q1 guidance. That's the upcoming quarter for this company. $875 million up to $925 million on that revenue side. Expectations was for $864. So you're blowing it out of the park, not only in the most recent quarter, but your forward guidance is blowing out of the park. And look, this company's biggest revenue gainers is in the cell phone. And cell phones, I mean, you saw Apple earnings last week. Cell phones are not selling like hotcakes these days. And so this company is doing great from a quarterly revenue perspective. Also, we got full 12-month forward guidance for fiscal year 2025. Revenue expected to be between $3.8 billion up to nearly $4.1 billion. The consensus for right around $4 billion. So this company's knocking it out of the park. And again, these estimates are going to get played around with because the company is still new. People are still trying to figure out the type of growth you can expect from this company. But one thing that you can expect from a company that doesn't have any fabricating facilities, doesn't have a lot of overhead expenses, you are not going to believe the gross profits this company puts off. Off that total revenue of $928 million, which we talked about was 46% growth over last year, where you put up just 633. Folks, look at your gross profit. This is a licensing business right here, from 606 up to 887. Folks, $928 million in revenue, $887 million in gross profits. I want to get down on one knee and ask ARM Holdings to marry me just based on these gross profits. These are amazing. Now, you still have to spend some money operating things, right? Research development from 381, boom, up to 584. So they're not just sitting around collecting checks on that gross profit. They're trying to develop something else. They know there's competition out there. They also know the x86 architecture, primarily made by Intel and AMD, it's certainly great as well. Also, over the last year, selling general administrative from 274 to 281. I'm actually kind of impressed because you look at it on the full year basis. Usually when you go public, your SG&A line just blows up because you hire all this back office staff, you hire attorneys and accountants and all this stuff and office assistants and all this stuff. Well, you went from 762 up to 983. That's not as big as I would have expected. So your total operating expenses over the last year went from 656 up to 865. For the full year, 19 up $1 billion. But again, they've gone public over the last year, so you'd expect some new expenses kind of come. Also, we'll see some of this is stock-based compensation. When you go public more recently, you're obviously going to issue shares and give shares to executives and employees in an incentive and potentially a reward for taking the company public. Now, here's where things will disconnect a little bit. Your operating income came in at $22 million, which to you and I, we'd be balling out, right? But this company is worth $110 billion, not $10 billion. $110 billion. So they're putting up less than $1 billion in quarterly revenue. Yes, a ton of it is gross profit, but when you factor in all of the expenses, you're basically at break even. The same paints through for a full year. It wasn't just on a quarterly basis off of $3.2 billion worth of revenue. You had $111 million in operating profits, and last year you had 671. Now let's keep going through these financials. You'll see that the balance sheet, a company that just more recently went public, they've got a boatload of cash to the tune of, we'll call that $3 billion. Total liabilities out of everything is just $2.6 billion. So financially, this company is sailing down the seas. Now, coming over to cash flows, you'll see where some of those operating expenses, those were actually a fair amount of, or some of it was stock-based compensation. In the most recent quarter, it was $185 million. For the full year, you issued $1 billion worth of ARM Holding shares. Again, when you go public, you tend to do this. Whether or not it'll reoccur into next year, we'll happen to see that. But this paints a better story than your net income, which was just $224 million. Last year was basically nothing. You went up from 483 up to 667. For the full year, you printed $1 billion of operating cash flow. But again, this is a $110 billion company to print $1 billion to the operating cash flows. Obviously, this isn't Microsoft, Google, or Apple, needless to say, but they don't have a lot to invest in. They're not Intel. They don't have to invest a lot in property, plant, and equipment. It's not a data center where they're like Google and Amazon and Microsoft, where they're spending $15 billion a quarter on that stuff. They don't have to do any of that. And so if you continue to see this type of revenue growth based on the gross margins that this company prints, well, a lot of the revenue growth will eventually throw down to operating income, and it obviously will flow down to operating cash flows as well. And at the same time, there's not a lot of use for the cash because this is just basically a licensing business. Now, over here, technical perspective, we are down about 7% in the after hours. I tell you what, when you're more recently public, it's hard and almost futile to try to figure this thing out from a technical perspective. We do have a gigantic gap on the chart with big volume. We almost filled it, found support, and we rebounded. I tell you what, technically, if you think this trend right here, we'll change this red line to like a purple shade. If you think that's the trend, well, here we are sitting right on trend. If you're taking a stab at ARM, I don't think you want to get below these lows here at $85. You get below 85 and you're probably closing the gap down here to 77 with obvious potential. You blow through this sideways consolidation where you're coming back down and retesting the lows back down to 47. And this stock is like a lot of stocks that we've looked at more recently, like Palantir, like SMCI. Today we looked at Shopify as well, where they have these big valuations and they've got to deliver. And if you don't deliver, well, the shares can fall off. And in the case of ARMS, It absolutely delivered, but I think what investors are realizing is that the Wall Street consensus estimates were simply too low and were probably slightly inaccurate. And on top of that, while the results are very, very impressive, not impressive enough for a $110 billion company. This one's going to remain on my radar. You get further weakness in the chip sector. You break below trend on this one. It gets more exciting. Even if we're sitting here a year from now and the price is a little bit higher, but we get more confirmation from kind of a technical perspective, but also a fundamental perspective, wouldn't mind dipping my toes in there. That was ARM Holding. Very exciting company. And I tell you what, the price is not going to go lower if you get a rebound in smartphone sales, and certainly Apple's latest design that is scheduled to be released in 4 or 5 months. I suppose that could reaccelerate things in a major way. Hopefully you guys enjoyed today's video. We'll be back again later this week. Good luck with your investments.